Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, hit the like button, and share these videos. Yesterday's action once again is defying all logic, as we saw another 3.3 million people file for unemployment, backed up by the ADP report that came out on Wednesday showing a minus 20.2 million people out of the workforce. This totals up to approximately 33 million people not working. Meanwhile, the NASDAQ goes positive on the year. The S&P continues to rally, pushing up toward 2,900, but still finding a lot of resistance. For some time now, it's been obvious that the markets are disconnected from reality. As we know historically, that markets are perceived to have a predictive ability looking forward 6 months or more. The bets that you're seeing placed in the markets are actually demonstrating just that belief of what market participants are doing. It's almost like playing musical chairs. Every time the music stops, there's one fewer chair. Everybody keeps moving while the music's playing, but always looking for that next chair because they know when this thing ends, it's going to be brutal. As I mentioned in last night's commentary, I fully expect at some stage that reality will come back into the markets. Because there's no frame of reference for an event like this, everybody is operating in this diminished view of what the future might be. We know it's not about earnings. We know it's not about a lot of things, but about the Fed and what the administration is going to do. And the belief is that we're all going to get back to work and things are going to come back to normal. That's how the market's acting. I was doing some research today and a thought came to my mind. The one thing that nobody's talking about is what the cost is to get the economy going. This is truly the big answer that we need to know, and this may be the reality that comes into play when the markets finally come to a realization that the economy has been destroyed. It's not going to be an easy comeback. We don't know how people are going to act. We don't know how many people are going to come back to work. We don't know how many businesses are going to fail or which ones are going to open or anything about the current situation. All of the bets being placed in the markets are based upon a guess, not on one of those aha moments. Oh, wait, this is just like that thing that happened in 2008 or 1929. Now, this is something that has never happened before. Meanwhile, markets are continuing to be strong. As we come into the unemployment numbers to be released prior to the open, optimism is just flowing everywhere. At least it would appear that way from how markets are trading. Once again, folks are pricing in that the economy will just come back in and everything's going to be like it was before we started. Many weeks ago, I talked to you about something that I believe is really important to remember, which is we will not come out of this situation the same way we went in. They're talking about middle seats on airlines not being booked. Everything's going to be social distancing, and businesses aren't set up to operate in that type of margin. Expect inflation to start to show up in airlines and other types of services that can't operate on these low margin environments where they require crowding or a lot of folks to participate. As we come out of this situation, there's another thing that we're going to have to realize. There is absolutely nobody doing any major transactions. There are some going on, but like M&A activity, mergers and acquisitions, major real estate deals, new buildings being started, economy expanding, none of that is happening right now. Nobody is making those decisions to do those type of things. It's like watching a stock and waiting for their earnings report to come out, and then it comes out and it's better than expected, but the stock goes down. Probably going to be the same situation here. The economy is going to get back online, and then everybody's going to be evaluating what they are seeing actually happening in the real world. As we complete this week, it looks like the optimism and those bets that I talked about earlier are going to continue, but the music will stop, so be prepared to find a chair. Let's take a look at the charts and see what the end of this week is going to look like. Well, as we finish the week, overnight we're seeing strength again with the S&P futures up 1.27% currently as we're coming into the London opening. We're starting to see that bid show up again. Over the past several weeks, I've been discussing the pattern that's been unfolding as a five-wave pattern. Oftentimes when you're doing analysis, as you see more of the charts unfold, you start to realize there's something else going on. There's a reason that is unfolding. That is why we've continued to see this underlying bid remain in the markets. So I've been talking about this five-wave pattern that looks like this, and this being the fifth wave. One of the issues that I've been struggling with is these downsloping PPMs, especially on PPM 1 and PPM 2. Now PPM 3, you can see down below here, is actually accelerating and is now turned up by 0.43. And what that tells us is right now, over on the left-hand side, the PPMs, PPM 1, 0.30, anything greater than 0.25 is a confirmed trend. PPM 2, 0.31, and PPM 3 now at 0.43. Also, I've discussed at length this signal that we got back on 326. It continues to be long. When I was doing my research for tonight's video, I discovered something that was very significant. I switched over to the S&P cash chart, and I want to break this pattern down. So it's been puzzling me over the past several days that this fifth wave, I've been talking about an ABC down, but it now appears, based on everything that's going on, is that we're about to complete a sideways correctional phase and start the next move up. Last week, I talked about these new Fibonacci numbers that emerged, and they are up here at 3158, 3223, and 3425, which would represent an all-time new high. So as crazy as these numbers appear, technicals are telling us that this is a strong possibility. I want to break down the pattern that's unfolding here, and I've been counting it, as I showed you on the futures a minute ago, as a five-wave pattern. Now it looks like this was the top of a wave 3 here, and then we get an A, B, C. We've got a beginning of a breakout, which this will be the wave 5. Let me break down what the projections are. If this is the correct wave count, which based on what's going on with a number of elements, I'm going to go to the weekly charts here in a minute just to break that down. This is a very significant technical event, but it still requires a close over 2954 to confirm it. If that occurs, I don't expect that will happen today, but if that occurs, it will confirm everything I'm about to discuss here. Another quick Elliott wave lesson. Wave 1 here was a length of 446 points. This is wave 2, and we got wave 3 up, and now we get this ABC that I just discussed, and the C ended right here at 2797. The rule in Elliott says that 2 of the waves are likely to be equal in length, 1 will be extended. So wave 3 was slightly extended, so wave 5 will be similar in length to wave 1. So 1 and 5 will be equal. Wave 3 will be the longest wave, which is typically how it unfolds. This being the case, we would take 446 points and add them to the bottom of the C wave, which was at 2797. That will give us a value of 3253. If you look at these Fibonacci numbers above here, this number here is 3223. So it's very similar, and this came from the Fibonacci projection tool that is built into my software. So this pattern suggests that the Fibonacci projection off of that is 3253. The pattern tool is suggesting that it is 3323. Once again, will only be confirmed by a close above 2954. That occurs, then this pattern will unfold. The other number that wasn't mentioned in that sequence is the 200-day moving average, which is currently 3002.42. That could represent some resistance, but it's not significant in this pattern. This suggests we get a close above 2954, then we're heading through the 200 and right to the numbers I just discussed. The weekly chart confirms this, and the upper Fibonacci number right now is 3106, which is the 0.76 retracement level. So there, once again, I discussed this last week, there's a cluster up here. The markets are starting to look very strong. As you look at the PPMs down below, you'll see that PPM1 is spiking through its first and second derivative. We're turning up on PPM2, and PPM3 is turning up. So all of these trends, amazing enough, are turning up in spite of the absolutely horrific economic scene that we see unfolding around us. The last market tonight, I want to take a quick look at the gold. We did see a very nice reversal pattern set up yesterday. We still need to close over 1737. I'm just updating the analysis that I did a few days ago. There are new Fibonacci projections for a rally to 1774, and then the next higher levels are 1811 and 1834. So we did not get down to that 40-period moving average. We stayed in that sideways range. We've now closed back above all the averages, suggesting we're likely to go to those levels just mentioned. This will complete the broadcast. Thank you again for watching. Look forward to talking to you again on Sunday night.